training, due diligence and rent roll sales. We are here to assist and support you. Your call is important to us, and one of our team members will be with you shortly. At the PPM Group, we are focused on improving the performance, profits and productivity of your property management department. Our aim is to give you more control with less stress and coach your team on working smarter, not harder. Talk to us today about our full range of products, training packages and services. We are here to assist and support you. To keep up to date with what is happening in the property management industry, join our e-news by visiting www.ppmgroup.com.au or join us at our Property Management Chat Room Facebook group. Your call is important to us, and one of our team members will be with you shortly. Ask us today about our property management scripts and dialogues audio series that have been recorded to coach your team in how to get the tenant and landlords to think your way. With more than 350 scripts and dialogues and role plays, this is the training tool that every agency needs. Are you looking to buy or sell a rent roll? Do you need assistance with the due diligence process? The PPM Group are considered the industry leaders and can guide and assist you through this complex process. Ask us today how we can save you time and money. Your call is important to us, and one of our team members will be with you shortly. Welcome to the PPM Group, where support, service and results are our #1 priority. Your call is important to us, and one of our team members will be with you shortly. Is your property management department reaching its full potential? Are you looking for that competitive edge? The PPM system is revolutionizing property management departments across the nation. We can assist in fine-tuning your current systems or provide the total solution. Join our live online training broadcasts from the comfort of your own office. Discover the tips, tricks and techniques to accelerate your property management department in how to engage in the top performing activities that 90% of your competitors are failing to do. Get the competitive edge into your business by attending one of our training sessions or join us at our National Property Management Conference held on the Gold Coast each year in June. Your call is important to us, and one of our team members will be with you shortly. Do you approach the end of month and then struggle to find value-added content for your landlord newsletter? Subscribe today and receive 12 monthly issues. Your landlords will love them. Our training philosophy is to inspire, motivate and educate your team members to reach their full potential. We can tailor design a session to meet your needs or deliver a keynote presentation at your next training event. Can you improve your internal systems and service levels? Is your business at risk? Ask us today about our comprehensive. Your call is important to us, and one of our team members will be with you shortly. At the PPM Group, we are focused on improving the performance, profits and productivity of your property management department. Our aim is to give you more control with less stress and coach your team on working smarter, not harder.
Good morning, PPM system members, and a big welcome to today's live tutorial where my focus is going to be on the correct application of our income report and bottom line. You're currently listening to Debbie Palmer, Managing Director of the PPM Group, and it's always good to pop in and say, hi guys. Sometimes it's a little lonely doing the live broadcast because I can't see you face to face. But if you have webcam access, you'll see me in the top left-hand corner of your computer screen. So today is a short tutorial, but a very important one because we're going to look at the financial recording and overview of the property management department. So the learning outcomes are we're going to learn how to enter, read and monitor the data within the department income report. Now that's a combined report with your trust account financial information as well as your general account. So the person that will be monitoring or managing the income report is generally the PA to the principal, accounts manager or senior property manager. A lot of agencies like to have their financials confidential to other team members, which is why we have our basic income report with, I guess, all the activities that we're undertaking, and then we have the department income report. Attached to the department income is also our bottom line report. Now, important, income report you will do at the end of the month. That takes approximately 10 minutes. But the bottom line report is one that you will do once a year, and it takes anywhere from an hour to 2 hours, depending on how easily you can access the information. But once you tailor design that report for your agency, it will give you information on what your average bottom line cost is to manage a property. That allows you to go, okay, well, a property under $300 per week may not be profitable to take on as a new management. It will also monitor data to allow you to benchmark your, I guess, productivity and activities of the team, and I'll explain how you can read that data. And it also let you know how many team members you need to manage your current rent roll. So I'm going to close down my webcam at the moment only because, as I often say, it slows down our internet connection, and it's really important that it runs smoothly. So let's get started. The first thing is we're going to the bottom right-hand corner of my computer screen where you should have your PPMsystem launch panel. Now, all of our financial KPI reporting is under our KPI monthly reports. Now, if I double-click on that report, it will open up an individual window that will make it a lot easier instead of going backwards and forwards to the launch panel. So we have a separate tutorial for the basic department KPI reports, which also complements your weekly record sheets. So if you have not attended that tutorial, either register for the live one we have, but we have also recorded all of our tutorials. So at any time you want to access them, you can email us and we'll send the link through. Now, just quickly, you've also got here your original templates. Now, that is just a mirrored copy of your working reports. And that is for some agencies that might go in and unlock and change coding, and then some of the links and the formulas disappear, so you've got a backup, but obviously using the backup, you will lose your data or have to re-enter it in. Or if it's just something minor on one of your reports, you can email your copy to us and we can review it and see if we can easily fix up the report for you. So that's the original templates of the reports. You shouldn't need the instructions for the KPI reports because obviously as a VIP member, you've got direct access to us at any time by picking up the phone or emailing us. And then lastly, the annual archives is where we save our basic department reports as well as our income reports. Now, today's focus is on our department income, so I'm going to double click on that. Now, it is going to ask for a password. Now, the reason for that is it is sensitive information that you do not want all team members accessing. So the password that you can change at any time, the simple password is just PPM, and it is case sensitive, whether you put it in as uppercase or lowercase. So I've put it in as PPM, and up comes our department income report. So if you're utilizing this for the very first time, you want to make sure that you've got your end of financial year updated. If you're a member that's had the system for some time and you may not have utilized it, it could say 2007. So it's super easy. You just click on the text, and this is where all of the formulas display. So you would just go in there and change it so you know what end of financial year that it actually relates to. Now, this income report is super easy and simple. It's just a matter of collecting the data, as I said, from the different programs, whether it's your trust or general account. So what I'm going to do is go through and put in some test data. Now, all of the financial figures that you will enter will be excluding GST, because we want to know what our income and our profits are for the department, and obviously GST doesn't stay in our bank account, it goes to the ATO. So we'll get a report at the end of the month from our trust. So our management fees, for example, are $12,482 for the month. Our let fees are $1,800. Casual let fees or let only, so you're securing the tenant and then the landlord is managing the property. Now, we have it in there. We don't recommend it. We don't endorse it. It is fraught with danger. You are taking on the full liability even when the owner is managing the property. If something goes wrong, they get into arrears, they damage the property because you introduced the tenant. We had enough requests from members that didn't want to take our recommendations, so we have added it as a checklist and on our KPIs, but I'm going to put in 0 there. Tenancy renewal fees for the month are $1,150. Postage and petties, or we call them admin fees, might be $850. Tribunal or court attendance fees, $110. Key cutting income that you may receive as a reimbursement, let's say, is $50. If you're charging for routine inspections, now I do appreciate that there is a broad spectrum across agencies as to what fees are charged. Generally, WA and Tasmania charge the highest fees. They charge for everything. The average fees are about 11 or 12%. I know if you're listening from New South Wales, Queensland, Victoria, South Australia, Northern Territory, you'll go, wow, that's extremely high. But they charge for condition reports, water meter reading, absolutely everything. So the next one is paid landlord advertising. And this is important. I know some agencies offer complimentary advertising, but if you're charging advertising, as you'll see shortly, it will just show you whether you're paying a top-up and give you the position of how much advertising you're actually paying. So for this particular month, we invoiced the landlords $860. We charge for processing insurance claims, that's $220. Water meter readings, I understand it's different from state to state. Sometimes the councils do it, sometimes the councils charge, sometimes agents do it complimentary, sometimes they charge. I'm going to say we're charging $500. And that's a collection of all of the properties on the rent roll. Some management companies also charge a fee for maintenance or refurbishment over $1,000 or $1,500, and they charge 1 or 2%. Now, I talk about fees and charges in structuring our department, where I give you an overview of what different agencies are charging nationally. Now, the reason for that, the 1 or 2%, is it's generally renovations where you have to choose colours of carpets or curtains or coordinate renovations or builders. So this particular month, let's put in $900. End of financial fees, I'm going to put 0 because let's just say there's one thing we don't charge for. Now, you can make changes to these. So you can put in any other fees and charges. You can go and delete different things if they're not applicable to you. Now, the next one I talk about in structuring the department, and that's where you have a combined sales and property management department. Now, it is best practice that if a property is sold through your agency from the rent roll to balance out the profits between the different business centres, that 20% of the commission goes back to the property management department to account for the loss in the asset value. Now, whether you want to embrace this or not, as I said, it's best practice. So an example is, let's say the total commission is $10,000, just for ease of calculation for me. So what would happen is we had one sale from the rent roll, 20%, $2,000, or 20% of the $10,000 commission goes back into the general account. Sorry, property managers listening, it doesn't go into your bank account. And then the sales department, because it's actually a referral, the salesperson hasn't gone out and listed it. It's been referred from the business. Now, some people don't introduce this because they have different models where the salesperson doesn't get commission because then they just get the listing again if it comes on the market. But what would happen if you're utilizing the 20% best practice? The commission split between the sales department and the agency would then be $8,000. So that's what that figure there is. So now it's saying for the month of July, the total income that we have generated from the property management department is just over $21,000. The next ones are really important as well when we're looking at the financial position of the department. And you will get these statistics. They're not always 100% accurate from your trust, and that's why we have our KPIs and income reports, because the trust doesn't give you as much detail. And if you've got inactive or tenants in between vacating and moving in, it won't be an accurate indication. So we want to know here what your averages are. So what's your average rent per week? Let's say $450. I'm going to put some data in here for you just so you can okay, so we've got the average rents each month. Then we want our average management fee. That is excluding GST. So I'm going to put in here oops, just let me, what is happening here? What did I do? Sorry, I'm just, okay, so I've put in the average management fee once again that you will get from your trust program. Now, why this is important is to analyse. Now, if you're in WA, CBD areas of Brisbane, your rents could be going down just because it is market conditions. WA is turning around. They have been 20% down in their average rents. But what it could also mean, if your market hasn't changed, so you want to know why the average rent is going down, and it could be that the property management team hasn't been focused on their regular rent increases. The same with the management fee. It could be you've had a changeover of BDMs or property managers, and they're starting to negotiate heavily to win the business. So you want to know why that is going backwards or it's increasing. Now, this figure here is just letting you know on average how much income for management fees you're getting per property. Okay, the next one down is from our worksheet totals, and our worksheet totals comes from our basic KPI reports. Now, the worksheet totals do display financial information, but it is deleted and updated each month if you've attended the basic KPI training. So often, and the feedback from principals is, look, we're happy to have it monitored month to month, but as an annual overview, we would like it confidential, not available to our team. So here we are putting in our pending management inquiry commission, and you'll get that from the tab of, and I might show you, I'll go to basic KPIs. Hopefully it's going to open up. So pending management. So it's wanting to know what the pending commission is. So let's just say it's 40,900. So in here, 40,900. Increase from rent increases. Now, it will let you know you've got to add up the total from rental increase tab, tenancy renewal tab, and properties let tab. So if we go back to our basic income, now there is a little bit of calculation, but literally it takes 10 minutes because we're using the functionality of an Excel KPI rather than an automated program. So to get that rent increases, we go to properties let, we add up 998, periodic increases 455, and tenancy renewals 101920. So we would come back, and you can have them open at the same time. I'm not going to add it up, I'm going to put that in. The next one, commission gained. So we would go back to our KPIs, properties gained $27,955. Now, we have also updated our KPIs. I've got a few more tweaks where we've added additional information. So that will be an upgrade at the end of the month. So what are we looking at here? We're just looking at the commission 9984. We're going back. Commission gain 9984. Properties lost. So we go back to our KPIs. Properties lost. Wow, 32,000. That can't be right. Or if I just make it an extreme example. Yes, I've made it an extreme example. As you can see, the rents here are $2,300, and here they're sort of $1,000, $1,200. But that is, I guess, an extreme example of monitoring your bottom line. So this is saying that you gained 10 properties for the month. You lost 10 as well. So most agencies would think that they're on par, but you've gone backwards. Wow, almost $20,000. So let's put 27,800. So this is saying as a dollar figure, you have lost out of your annual commission $17,000. Now the next one, total expenses, you will get from your general account. So how much for the month did you pay out in advertising? Let's say it was $1,200. So this is now letting you know that your advertising profit and loss, you're down $340. Now the next one is really important. This is what are your department wages for the month. Wages, commissions, and superannuation. So if I put in there, let's say 8,200. So that is what the wages are. Because what it is going to do is give you a wage percentage to income, which I talk about in structuring your department. Now, it is best industry practice for your agent to work towards, or your business to work towards, a 30 to 40% wage to income. Now, what that means, it's taking it from your income. To make it simple, if you're generating $100,000 in income a year, 30 to 40% will be wages of $30,000 to $40,000, which obviously we've got coding to break it back to a monthly basis. Now, there will be some agencies where that is very, very high. It could be that you haven't reached a break-even point with the number of properties, or you are just paying too much in wages. So it will also give you what your profit is. Now, okay, I've overlooked completing this box here, and it is asking what are your total expenses. So you will look at the profit and loss and look at all of the expenses for the month, the rent, the electricity, including wages, let's say is $18,000. Now that is saying that you are operating at a profit of $3,520. If I change this to a different figure, it is now saying you're operating to a loss, and as a percentage, that's a 20% loss. Now, most businesses, a little bit of an accounting, as well. Most businesses like to operate to a 20% increase in profit each month if they're growing as best industry or benchmark practice. So hopefully that was fairly straightforward. It will also give you an average asset value of your rent roll. Now, this may need to be modified, which we often set up when we install the system. Just make sure that the figure up in the calculation here, this 2.5 is the multiple. So, oops, no, don't. Sometimes, that's what I mean by sometimes you may lose. Okay, so if your multiple is, say, $3 or $3.10 on average, you would make a modification to that particular formula up the top. Now, that is some people like to see numbers, and this will give you a comparison from month to month, but it will also, if I put in some more data, will convert it into graphs as well for you. Okay, that is our department income report. If you have any questions about completing that, please email or telephone us. Even if you get to the end of the month and you've forgotten what something means or what needs to be entered, no question is too big or too small for us. The next one is the bottom line. Now, this can seem a little overwhelming. This is the one that you will do once a year, and it is targeted to the activities of your agency. So we need to complete all of the white sections. So number of properties managed, and this is just going to give you averages. Let's say you manage 420 properties. The average rent is $460. Your average management fee is 7%. Now, if you're listening today and they're the approximate figures, you will be generating an annual income on average, including the let fee, commission and let fee, of just under $900,000. Now, to work out the average cost to manage a property and how many team members you need, the next step you'll do is to enter your expenses. Now, you will get these expenses from your general account, and they are annual expenses. So total income for the previous year, total income, let's say it's 780,123. Projected income and increase for your profits. So what did we say there? We said we want to work towards a 20% profit. Now, you only need to complete this once a year. And what it is saying, based on the new management activity that you're signing up at the moment, to get that 20% increase, you need a net gain of 75 properties. Now, if you increase your average rents, it could be 70, it could be 65. As I said, this is it doesn't fluctuate too much, maybe 10,000 either way, but it's a great tool to benchmark and set budgets for a 12-month period. Okay, the next one that we're going to do, and if you're combined sales and property management, we need to put in, so we're looking at the expenses. You may need to talk to your accounts manager or accountant to assist you, but once it's completed, the information is there. So let's say that the rent is half sales and property management, and the rent for the year is $45,000. So it's going to break it down and say the allocation for property management on a weekly, monthly, and annual basis. But what you'll do at the end of the year, and you might have had a rent increase, you will actually put in what it was. So you can, it's 250, that's a bit too much. And we will do that for everything. We're going to allocate any repairs for the office. We might allow a $2,000 budget for that. Telephones, 50%. Or it might be that you feel that the property management department makes more calls, and that for the year, let's say, is $11,000. And you will go through and do that for all of your expenses. And once again, you can modify, change, and update them. Now, you'll see up here for your salary, you cannot enter. It says page down to insert wages. So if we come down here, okay, let's say staff member 1 is Jackie. Welcome, Jackie. Staff member 2 is Melanie. Welcome, Melanie. Staff member 3, and you guys are all on board, is Terry. And I'll just put 3 in. Now, if Jackie is doing half reception for sales and property management, we would put in a 50% allocation. Her total wage is $38,000. Superannuation, let's just put in $4,000 to put figures in. Work cover as a percentage might be $50 and so on. I'm not going to enter it all in. Now, Melanie is the department manager. She only does property management on $80,000. Okay, the super is $9,000 and so on. Now, what this is doing is giving you a cost per minute, which is really important when we get to step 2. So Jackie is every single minute that you are leaving for a toilet break, a cigarette break, you're going out to have a coffee, you are costing 18 cents a minute. Melanie, you are costing 75 cents a minute. Excuse me. So if we go back up to the top, you will see that it is added in all of the wages. Now this percentage here, and hopefully it's not too complex accounting, this percentage is the percentage of income. So your salaries in total is almost 13% of your income. Your rent is almost 6% of your income. Now, the expenses or projected expenses and budgets are fairly straightforward. Now we move to the tricky bit, which is your bottom line. Now, this is broken up into team member roles as well as tasks. Now, the reason we have to do the per minute is simply because that is how Excel works. So we have got working on the business. So that is if you've got a business development manager or a department manager. So number per annum. Developing your systems, checklists and forms. We do sell the KPI reports independent, outside of members as well, but you may do some review. So let's say once a month, So that's 12 times a year. Once a month, you're going to allocate an hour on reviewing your system. And Melanie's going to do that. So it's 75 cents per minute. I know this is over the top, but this is the only way that you'll get an accurate indication of the average cost to manage a property. So I might just, let's put in data, just fairly straightforward. So revise and update systems, team management meetings. Actually, you might be doing those once a week for half an hour. You would put a sum total in there of all of the team members. Then we move down to marketing. So database management, updating that. You could be doing it 52 times a year. You're doing it once a week, and you're going to allocate an hour on database management, and your BDM wage calculation was 55. Community marketing each week. They should be doing, say, 3 hours a day, so that might be 300. And that's just actually 6. Let's do 360 as 6 hours a week. To do the client service calls, the BDM's doing those, but they're only allocating 3 hours and so on. Now, don't worry about all the calculations here because it's going to give you down here in the totals. So the weekly total for, and I haven't entered in all the information, let's do this, is what they are costing, and that should in fact come out to a similar wage cost because you would have allocated all the time in the week, if that makes sense. If I put in 300 here, put in 55, put in 52, you're getting closer to the wage. The same as for the BDM, and we separate it because different team members could be performing different tasks. Then we move down to general property management. So answering property management calls is on average a week. I mean, let's just say they do 3 hours a week. The receptionist is 35. So it is something that you need to sit down and give consideration to, or I'm happy to do one-on-one consulting. Entering rental payments, it could be an automated process, so it's nothing, or it could be done each week. It's 30 minutes a day, so that's 60, 90, 120. Rent increases, prepare the documentation each week. On average, how long does that take? Now, these are separated. You'll come down to property manager. If your portfolio, then that will all be grouped together. But see here where I've got rent increases to do the paperwork. You've also got rent increases to contact the owner. So once a week, that might be an hour for a property manager. So as I said, it takes literally, this webinar goes for 45 minutes. As long as you have all of the data, it takes a couple of hours to do once a year. When you've entered in all of the data, it will, and correctly, it will let you know that to manage, which I haven't entered it in correctly, but to manage 420 properties, let's just put in here so we can get it a little more realistic. Okay, so can you see here where the number of staff required has now changed? Because we've changed the average time it takes to complete the task. It will also, so these are the main ones we need to know. The staff required, it'll give you the information on your annual projected income. And then down here, and I've probably put in figures that are too high, down here it will say that the average cost per property per year is $7,000. So if we break that down, it might be, well, we already know, don't we, that the average cost is $1,800. So if this is saying $3,000, we need to look at something. We need to either adjust our wages to be that 30 to 40% of best practice, or we need to look at reducing our expenses. So I think the income report is very straightforward. I know the bottom line, it may seem overwhelming, but just as a refresher, the first thing you complete is the top line here of your averages. You complete all of your expenses, including your wages for each team member. And then you need to work out what the average activities are per team member. So a big thank you for attending our income and bottom line report. And once again, if you've got any question at any time, we're here to support you. Have an awesome week.
You to recruit team members with limited experience.